Comply with Treasury policies, procedures and controls, such as investment, FX, risk management, hedging, credit approval, Sarbanes-Oxley, SSAE 18, SOC 1, SOC 2. Compliance with Treasury policies, procedures, and internal controls is essential for protecting organizational assets, maintaining financial integrity, and supporting effective risk management. Treasury professionals establish and follow structured policies governing cash management, investments, financing, foreign exchange activities, hedging, payment processing, and credit management to ensure consistent operational practices. Policies provide clear guidance regarding authority limits, approval requirements, reporting standards, and acceptable risk exposures. Treasury procedures define how activities are executed and monitored across daily operations. Effective compliance strengthens governance, reduces operational errors, and minimizes exposure to fraud or unauthorized transactions. Treasury professionals must understand organizational policies thoroughly and ensure Treasury activities remain aligned with corporate objectives, regulatory obligations, and industry best practices while maintaining transparency and accountability across financial operations. Investment policies are particularly important because Treasury professionals manage organizational liquidity and excess cash balances that require careful protection and oversight. These policies define approved investment instruments, diversification standards, maturity limits, credit quality requirements, and counterparty exposure restrictions. Treasury teams must comply with established guidelines when selecting investments such as Treasury securities, money market instruments, commercial paper, or certificates of deposit. Adherence to investment policies protects principal, preserves liquidity, and reduces exposure to market or credit risks. Treasury professionals also monitor compliance through reporting systems, portfolio reviews, and internal audits. Strong investment controls improve accountability and support prudent financial decision-making while ensuring that Treasury activities align with organizational liquidity needs and board-approved risk management objectives. Foreign exchange and hedging policies help organizations manage exposure to currency fluctuations, interest rate volatility, and commodity price risks. Treasury professionals follow approved policies when executing derivative transactions, entering forward contracts, or implementing hedging strategies. Policies typically define authorized instruments, exposure limits, hedge approval procedures, documentation requirements, and reporting obligations. Treasury teams must ensure hedging activities are designed to reduce risk rather than support speculative trading activities. Compliance with hedging procedures also supports proper accounting treatment and regulatory reporting. Treasury professionals continuously monitor exposures and evaluate hedge effectiveness to maintain alignment with policy objectives. Effective foreign exchange and hedging controls reduce financial volatility, protect cash flows, and strengthen organizational stability during changing market conditions. Credit approval procedures and counterparty risk controls are critical components of Treasury governance because organizations frequently interact with banks, suppliers, customers, investment firms, and derivative counterparties. Treasury professionals comply with policies that establish approval hierarchies, credit exposure limits, due diligence requirements, and ongoing monitoring procedures. Treasury teams evaluate counterparty financial strength, credit ratings, liquidity positions, and operational reliability before entering financial arrangements. Effective credit controls reduce the likelihood of losses resulting from default, fraud, or operational disruptions. Treasury professionals also maintain documentation supporting approvals, transaction reviews, and compliance activities. Strong governance over credit approval processes improves risk management effectiveness and supports secure relationships with financial institutions and business partners across organizational operations. Regulatory frameworks such as Sarbanes-Oxley, SSAE 18, SOC 1, and SOC 2 significantly influence Treasury operations and internal control requirements. Sarbanes-Oxley emphasizes financial reporting accuracy, internal control effectiveness, and executive accountability for publicly traded organizations. SSAE 18 establishes standards for evaluating outsourced service providers and third-party operational controls. SOC 1 reports assess controls affecting financial reporting processes, while SOC 2 reports evaluate security, confidentiality, availability, processing integrity, and privacy controls within service organizations. Treasury professionals must understand these frameworks and ensure treasury systems, processes, and external providers comply with applicable standards. Effective regulatory compliance strengthens governance, enhances stakeholder confidence, and reduces operational, legal, and reputational risks associated with treasury activities and financial reporting. Internal controls and monitoring processes are essential for ensuring ongoing compliance with treasury policies and regulatory standards. Treasury professionals implement segregation of duties, dual authorization requirements, access controls, reconciliation procedures, and audit trails to reduce operational and fraud risks. Treasury management systems support automated monitoring, exception reporting, transaction approvals, and policy enforcement across treasury activities. Internal audits and periodic policy reviews help identify control weaknesses, operational inefficiencies, and compliance gaps requiring corrective action. Treasury professionals also provide training and communication to ensure employees understand applicable procedures and responsibilities. Strong internal controls improve operational consistency, enhance financial reporting accuracy, and support effective risk management across organizational treasury functions and financial activities.